When it comes to precious metals, usually gold comes to mind. But what if I tell you that silver could offer one of the best investment opportunities for the next decade? In this video, guys, we will deep dive into silver and I will tell you absolutely everything you would need to know. Okay, guys, so let's begin. So silver is both monetary and industrial metal, meaning that it gets affected by gold, so it tracks gold, and the overall economy, and it tracks copper. But the reason silver is so valuable is because it's very heavily used in industry. So this is an ounce of pure silver, 99.999%. You would need 1 ounce of silver to create one electric car. Right now, there are about 2 to 2.5 billion ounces of silver in coins and bars, so in investable form, meaning that we don't even have enough silver per person on the planet, not even half an ounce. And it is also used in solar panels, wind turbines, and a lot of other applications. So the issue right now, or I suppose for investors, that's a good thing, is that the overall commodity sector has been heavily underinvested, and therefore the supply is lower than demand. With silver, it's quite difficult to measure proper supply and demand because usually it's a byproduct of mining of another material. There are very few pure silver mining mines. And because of that, silver usually comes as a byproduct when mining for copper, we're mining for zinc, gold, etc. So now we are aware of the basic things about silver. Okay, so it looks good from fundamental perspective, but let's look at its older brother, gold. It performed unbelievably well, so it pretty much doubled in a year and a bit. But silver did not perform as good. And it's important to look at historical ratios. I also say in all of my videos that ratios are unbelievably important because they allow us to compare your asset of interest against a lot of other things. You can compare it against Big Mac if you want and actually get some valuable information historically. And so with silver, its ratio to gold historically it's been about 1 to 50, 1 to 20 at times. Right now I think it's 1 to 100. So historically silver is really undervalued compared to gold, but its applications and uses are actually increasing. So I believe we're in a unique opportunity where the gold already performed and historically silver always catches up gold near the end of the run. And no one really knows why that happened. Some people speculate, and I do believe this thesis that people get interested in gold. Gold goes mainstream, but then gold gets so expensive that it's difficult for an average people to buy it. So they get interested in silver, and then silver spikes. But because the silver market is way, way, way smaller than the gold market, it's much easier to dramatically increase its price, and therefore that's why historically we have these spikes. Silver is also, I believe, the only metal thing that's cheaper right now than it was in 1980. So in 1980 there was this spike to $50, and right now it's about $33 per ounce, which is really, really cheap. Historically, it's really, really cheap. Fundamentals look great, and for the technical guys, there is a large cup and handle formation from 1980s. So it's really, really powerful. It still needs few years to fully play out, but by playing it out, it means when it gets to 50, that's just finishing the cup formation, never mind the breakout. So silver is very promising, but it will not make you rich overnight. You would need to be patient and you would need to invest in it for the long term, expecting sharp pullbacks. If you're interested, if you still believe in the thesis, that's the best opportunity to buy more. And that's what I have been doing for many years, and that's something that I will be doing for many years as well. What can offer even a bigger opportunity is silver miners. Now, again, this is not a financial advice and it's very risky because you require competency. So in my case, I specialize in the mining sector. That's all I do from the investing perspective. And it's much easier with gold, with uranium. To pick companies silver, it's much more difficult because I believe the quality is overall lower, but there are companies like Pan American Silver, Fresnillo, but there's risk with Mexico. They're very anti-mining right now politically, so it has a lot of risks. Mag Silver, but that's being acquired now. So uh, with the companies, if you do want to get competent, learn the sector, there's a lot of opportunities in there. However, I would not recommend buying ETFs because, well, I suppose from a person who studies the sector really deeply, there are companies within the ETFs that I wouldn't touch. That's not to say that ETF is going to do really, really well when the price of silver goes up. I'm sure that that's what's going to happen. And usually the companies that have the smallest margins, let's say a mining company produces metal for um, 20 ounces, but the price, or for $29 per ounce, and the price is, let's 30, so the margin is quite small. But if the price goes to 35, their margin increases dramatically, therefore the valuation can increase dramatically as well. So that can happen in the mining sector as well. But overall, the mining sector has a lot of opportunities. If you really want to study it, you can find a lot of opportunities in there, and you can absolutely buy ETFs as well. But I believe the actual metal can offer a lot of potential returns as well. If you're interested, guys, I have a completely free how to get started PDF. It's not related to silver or the commodity sector, but it talks about different well building paths that you may take if you're still at the beginning of your well building path. I have put a lot of energy and effort into that file. So if you are interested, please have a look. And thank you very much for watching. I'll see you soon.